Welcome to Vital Investing channel. In this episode, I'll be looking into Adobe to see if it's a good time to buy, hold, sell, or do nothing. Adobe, ticker ADBE, is one of my targeted stocks in my high conviction watch list. Adobe's main business is in its Adobe Creative Cloud, which includes apps used by designing professionals such as Photoshop and Illustrator, Photoshop Lightroom for photo editing, the famous Acrobat for PDF, Dreamweaver for building websites. We also have Premiere Pro for professional video editing, After Effects, Anime, etc. The cool thing about Adobe Creative Cloud Suite is that it's on a subscription model, meaning those already using it, having acquired the skill sets to use it professionally, will most likely continue with their subscription. Best part is, Adobe has high penetration into educational institutes for the students to learn and use its professional apps. The moment they step out into the workforce, bingo, they go for the Adobe Creative Cloud subscription, or most likely, the company would have already got a corporate subscription. Personally, I feel that the best business model is one with a subscription model. This gives Adobe a consistent recurring subscription income and super strong business stickiness. Now, let me first start with the technical analysis aspect for Adobe. From the chart, we can see that Adobe has plunged from its November high of nearly $700 to currently $442. That's a 36% drop. Since its low when COVID strikes in March 2021, Adobe was on rapid rise till September 2021 before it corrected, supported by the 200 exponential moving average line. Adobe enjoyed another surge to its all-time high in November 2021. With major market corrections since December 2021 and whole of 2022, many growth tech stocks have been severely punished. Adobe is one of them. Going back to Adobe's chart, you can see that the Mark 97 buy signal is triggered. This is accompanied by a MFI money flow index of 33, almost entering into the green buy or oversold zone at 25. Most importantly, its current price is way below its 200 EMA line. Now let's check out the very important fundamentals. Using my favorite B app, we know that Adobe has a B score of 85. So what does this B score means? Simply put, a B score of above 70 indicates a fundamentally good company. So a B score of 85 for Adobe is pretty high. Moving to B line, it is indicating an intrinsic value of $526.70, meaning Adobe is now have a 16% margin of safety with its current price. That means it's currently below its fair value. Here we're adopting the price to sale valuation model. Moving on to B star chart, you can see its strong score in growth, profitability and health. Let's dive into its financial key ratios. First, let's look at its total debt to equity ratio, which stands at 0.320. Now, any figure less than 0.5 for DE ratio is good. This means Adobe literally has low debt. Now check out its free cash flow, which is steadily climbing for the past decade. That means Adobe could easily pay off its debt if it wanted to. With the impending interest hikes, those with high debt will be mercilessly punished. But even though Adobe has a low debt to equity ratio, it has been corrected together with the broad markets, hence providing us a good buying opportunity if we believe that Adobe or any other fundamentally good stock is mispriced. Now, let me take you to Seeking Alpha to check out the overall ratings of Adobe by the Wall Street analysts. Currently, Adobe has a Wall Street rating of 4.35, signifying a buy with an average 5-year price target of $661.93. That's a good return on investment from its current $442. You may ask, why use Seeking Alpha? Isn't all those ratings kind of biased, often with an intent or agenda by the individual analyst? Well, agree to disagree. At times, I find very good insights shared by Seeking Alpha's authors which play an important part in providing viewpoints of a company from many angles, thereby helping to build better conviction for stocks you're analyzing. We also have tip ranks, showing Adobe is now a moderate buy with a price target of $667.40. Jumping back to the macros, Fear and Greed Index is currently standing at 36 fear zone. Just a month back, it was at greed zone. These days, it doesn't seem surprising to see this Fear and Greed Index toggling between red and green sometimes in the same week. Again, on macro perspective, the buzzwords or triggering events for such roller coaster volatility currently are inflation, interest hikes, and last but not least, the highly tensioned Russia-Ukraine situation. So, back to the original question, is it a good time to buy Adobe? For myself, I'll place a GTC extended at $388. Yes, I know this GTC is a bit crazy, but with the market having such volatility, who knows, the order might just be filled in no time. Note that this is certainly not a recommendation for you to do the same. You have to do your own due diligence. So, that's my take on Adobe. Let me know in the comment below whether you'd be buying or accumulating more when it is now kind of undervalued.